I recently read that Trust Wallet now has more than 210 million customers globally. What is driving this growth? What type of users are coming and using the platform?
Yeah. Thank you for noticing that. A lot of the growth were driven by, of course, the exciting things happening in the crypto markets. But there are more users that we see growing on the silent majority, that people from across the world globally, everyday people using crypto for everyday purposes. Specifically, a lot of them are using stablecoin to send across the borders. We see a lot of the flows from developed countries to developing countries to Latin America to India, etc. Because blockchain offers a much cheaper way of sending money across.
It's very interesting, and there's a big use case on the remittances side. So that's a very interesting use case. Do you also see other activity, like how other, like the average size of the customer balances, for example, for lack of a better word, on Trust Wallet?
It's actually very bipolar.
Okay.
We got people who might be just having like $10 or $20 here and there. We also have 8-digit, 9-digit $1 million of the balances that the users will be storing on the blockchain through self-custody.
And what is the biggest challenge when it comes, let's say, to user acquisition? Is it education for them to be able to get comfortable with self-custody? Is it just knowledge of the tool? Like what, or is it just market beta of crypto adoption, like you mentioned, that silent majority that are just embarking onto crypto?
Yeah, I think there are definitely things that can do better with how the product, the educations make it easier and safer for people. But at the same time, the more important is how useful crypto can be in people's daily life.
Interesting. You know, for a long time, when it came to self-custody, user experience was a problem. There was this UX problem with self-custody wallets. You know, my mom can maybe go use a centralized crypto exchange, but maybe for her to use a self-custody wallet, it's more complicated. What do you think is being addressed to solve that issue, at least improve it? And do you believe it's still an issue today?
I think the hardest issue that still exists and will continue to exist is how to trade off between simple, easy to use and give people full control and freedom of their assets, which is the essence of self-custody. And we're now having more technology, such as sharding the keys or allow people to back up their secret phrase on in encrypted format in cloud storage. But they will always, at some point, sacrifices a bit on users 100% the only one control their own assets. I think ultimately it will come down to different people might have different needs, and they will choose across the scale what works best for them. So now we see more products coming up, more options coming up, so you can feed for people's different purposes.
When you're talking about the different needs from users, where does physical security come in play? We've seen recently all these kidnappings and issues that happen in the crypto community. Isn't there increased risk with self-custody that these events can go wrong, whereas if your assets are with a third-party custodian, you know, there's not much you can actually do to move those assets?
I actually don't think the core problem is if the criminal decides to commit crime, kidnap, is based on whether this person self-custody or not. Because ultimately they will be asking for the money, you know, and regarding to how you move the money is your issue. I think it's more about there are increasing targets that crypto industry give exposure to. I have known and I have seen people working together in the industry across the law enforcement globally to help to make sure that builders in our space are feeling safe to continue to innovate.
And do you believe there'll be a day where the self-custody industry will need to fall or have more regulatory oversight just by the nature of how things are going, or the sacrosanct belief of not your keys, not your coins will continue to remain true, at least definitely in the crypto ecosystem?
Yeah, I think it depends on jurisdictions will take a stance on what is fundamental rights for citizens. I think the U.S. take a stance that self-custody is a fundamental right, and it will not be having regulation around if it's true self-custody. There might be different degrees of oversight if it comes down to semi-custody or some sort of custodian responsibilities going in there. That might be an interesting time to see what might be the opportunities over there.
And outside of just, let's say, holding private keys of various digital assets, are you seeing users use it for different purposes? Are you seeing more users use real-world assets, tokenized products? Are you seeing them for staking? How are you seeing the user base adapt how they're using the crypto?
Oh, absolutely. Besides remittance, there are two major routes that people go to. The first one is, of course, people find crypto world to be a lot more interesting. Now they get their food into the door. They're learning about different kind of crypto concepts and then getting their food on. Of course, one of the primary behavior might be swaps or DApp engagement, those kind of issues. Another area is, even with stablecoin, there are a lot more traditional finance, RWA, and DeFi strategies that can help people to earn yield in a safe way. And those are some opportunities that we see are increasing that help people to better preserve their money and combat interest rate inflations better than their banks.
Yeah. Actually, you mentioned banks. In a way, the beauty of self-custody wallets, you have your assets there, you can generate yield, you don't need to put it into a bank. Do you see the banks as potential competitors, or the banks who see you as a potential competitor down the line, as people can take their assets out, keep them there, get better yield, frankly, than they're getting into the bank, and they're master of their own keys?
I think it's not going to be wallet that's the competitor. It's ultimately the blockchain, which the users' funds are in, right? Because different from banks, we cannot move users' money. Yeah. What we can do is how to best inform and provide opportunities surface to the user so they make their own decisions. And I think that's a fundamental difference between banks will do services for you, while we as a software product is to help people to do better decisions for themselves.
I think it's very interesting you mentioned how in the US now it's seen as a fundamental right, the right of self-custody. And I think this is going to be very, very interesting development to watch over the coming years. Last question, Eowyn, is really, let's say we have this interview in 2035, 10 years from now.
Yeah.
How do you see the future of self-custody evolve? Like, where do you think we'll be in 10 years from now?
Yeah, I think the key question behind self-custody is what rights and power do people have with their most valuable assets? I think right now we're just looking at self-custody with crypto. How about with other assets? And then what does other assets mean? How about data? If the future of the world is going to be on-chain or even AI-driven world, data is going to be very valuable. How do people preserve their own data ownership? How do people preserve their identity ownership? Right. So if we're talking about self-custody, it becomes like, how do people preserve and protect their most valuable assets and the toolkit and the power that they have around it?